You're listening to the Option Alpha podcast from OptionAlpha.com, where we show you how to make smarter trades, learn how the stock market really works, and generate consistent monthly income. Now, your host and head trader at OptionAlpha.com, Kirk Duplessis.
Hey everyone, this is Kirk here again from OptionAlpha.com, working every single week to make this the most popular investing podcast offered in iTunes and online because it's based on one thing and one thing only, and that's helping you make smarter trades. So thanks so much for tuning in today again, and I hope you guys really enjoyed the episode that we had the other day with Sarah from SheCanTrade.com. I've got a lot of feedback from everybody. It seems like everyone enjoyed it. It was a really popular download, so we'll be doing a lot more interviews with other traders coming up. And again, my goal with doing this is just to get you guys a little bit of exposure to how other people trade. And I think, again, with our interview with Sarah and John Carter and some of the other people that we've had on the show, some of the same themes kind of prevail throughout. And I think that's what's really cool about doing these interviews on my end, is that even though we might have differences on how we trade or the strategies, we have the same underlying themes, which I think make us successful in doing what we're doing. So in that same vein, today I want to talk about kind of the shocking truth behind how you can become a more consistent and profitable trader. And I say it's shocking truth because the reality is that in this industry, and especially in the options trading world, we're not really told what makes a successful trader. And what we are told really isn't true, right? We're told things like, you need to have a lot of money and you need to trade very fast and you can only day trade options and you can't trade stocks. You only can trade indexes and so many other things that I just don't think really kind of sums up what it is to be a consistent and profitable trader long term. So my goal in this podcast is to really change your entire mindset, especially if you're new to listening to Option Alpha, or even if you've been a member or coaching client of ours for a long time. I want to change your mindset about how you think and approach the options trading world, because it's completely different. And I've got the confidence to even tell you that if you stick with it, as you'll see, and I go through stuff here today, as you stick with trading, the longer and longer you stay engaged, the more and more successful you're going to become. I guarantee that you will be successful doing this if you stay engaged long term. And so let's just get started here and jump right into it. So I've got a couple things that I want to talk about in no particular order, just things I've kind of jotted down here for you guys. And then we'll look at a possible trade that we're going to do here towards the end of the episode in APC. So kind of putting a little bit of our story and some of the things that we're going to talk about into action with a real live trade in the closing bell segment. So I think the first thing is that becoming a consistent trader starts with confidence. I mean, everything in this whole entire business starts with confidence and having the knowledge to understand why you're doing what you're doing, right? If I just told you to do something and then I left you alone and say, okay, do that every single day, no matter what, right? You would maybe do it a couple days, maybe, even a week, but you really wouldn't continue. You'd have no consistency in doing whatever I told you to do unless you were confident in understanding why we're doing it. So why do we sell options? Because implied volatility is our friend. It drops. It's overstated, right? So understanding the why behind everything, I think, is even more important nowadays than ever before. And that's what we do as part of our free training and as part of our membership at Option Alpha, is help you understand why we do what we do, why we sell options, why we take small position sizes, why we, focus on the strategies that are neutral in direction in most cases, why we trade around earnings. We go through all of that, but that's the key. You got to have confidence before you can ever get to a level where you have consistency. Now, the second thing is, I think you have to be disciplined, but I'll say this, being disciplined is somewhat of a lie nowadays, right? I mean, we often hear all the time that we need to be disciplined and we need to be robotic. And I even say it myself sometimes, that we have to be a little bit more robotic in how we trade. But it's not that we need to be disciplined in every single aspect of what we do all the time. The key is that we have to be disciplined long enough for a habit to kick in and then take over automatically. Like, we don't ever think about waking up sometimes and jumping in the shower, getting our clothes on and brushing our teeth, right? It's not like we're mentally thinking hard about how we do that. It's just a habit now. We do it, right? We get up, we shower, we get our clothes on, we brush our teeth. And that habit has been trained and perfected over many, many years. Now it just kicks in. So what I say is that you've got to develop a trading habit. And whatever that trading habit is for you, it's got to last long enough for that habit to kick in. And a trading habit could be a habit of looking for high implied volatility setups every single day. That's a habit. A habit of entering a trade and making sure that you have appropriate pricing on the trade. Are you getting enough premium for the risk that you're actually taking in that trade? That's a habit that you have to develop. And it's going to take a little bit more effort and a little bit more work to get started. But once you do it long enough, that habit's going to kick in and it's going to become second nature. And so every time that you go in and look at a trade, you're naturally going to look at pricing and make sure you're getting enough pricing. You're not going to have to think about it as hard as you did that first, one time or couple times that you started. So here's something to think about in the vein of habits. So recently, a research study was done a couple years ago by the University College of London, and they took a bunch of people and they tracked all of their habits. And they said, or they wanted to basically answer the question, how long does a habit take to form? Now, traditionally, we've been taught that it's 21 days, right? Or some people might even hear 30 days. That it takes 21 days or 31 days of doing something to form some sort of consistent habit. But what they actually found, tracking thousands of people in all kinds of different habits, is that on average, it takes about 66 days for something to become automatic and a habit. And so what we find here is that we need to put forward 3 times as much effort to form a habit. In the world of trading, that means that you can't just make trades and do this system or whatever system you want to follow, our system, somebody else's. You can't do it for 3 weeks. You can't even do it for a month and a half. You have to be doing it for a couple months to really develop that habit. That means, glancing at the markets every single day for a couple months, looking at a new trading setup every single day for a couple months. You've got to put forward 3 times as much effort. But then once you hit that magic, 66-day mark, and it may be a little bit different for you or for somebody else, but once you hit that magic mark, then it becomes automatic. Then you don't really have to put forward the effort that it takes to run through an analysis or to price a trade or to look for trades. It now becomes more or less automatic. You don't have to really think about it. It just kind of happens, right? So here's what I would tell you, and this is a quick story from my own. We talked about goal setting in a couple episodes ago. I believe show number 32 was how to set financial goals and the top mistakes that people make. Well, a big goal of mine over the last couple months has been to get up earlier. So with my daughter, and now that I stay at home with my daughter, it's a big goal of mine to get up earlier so I can get some work done, check some emails, go over my goals, kind of get set up for the day. And now I'm getting up at 5 o'clock in the morning every single day. And it's pretty much regardless of when I go to sleep. I could go to sleep at 8, I go to sleep at 10. I usually get up right about at 5 o'clock every single morning. But this wasn't always the case because my body wasn't used to it. It wasn't a habit that I formed. And it wasn't until a couple months into it that I actually really started to consistently get up at 5, right? Some days I would get up and I would be up at 5:15, and then other days I'd be up at 6, and then 5:05, right? But I really wanted to get up at 5 o'clock every single day and start that, early morning routine of mine to kind of jumpstart my day, make sure that I was really productive, get a lot of things done before my daughter even woke up. But again, it took a long time. And I know that from my own experience that it took more than 21 days, right? And there's a little bit of variance in there, right? Some days I get up later, earlier, but it's just going to take a little bit more effort. And now that it's in place, again, like clockwork, I'm up every single day at 5 o'clock. The alarm goes off, my body knows, and I know it's time to get up. It's a lot easier to do. All right, so as we continue to talk about these consistency things that you need to be doing, I have put together a free download for you. If you haven't already grabbed it, it's our 7-step entry checklist for any trade that you might be making. So it's really the top 7 things that we go over when we look at a new trade. And you can get that 100% free. All you have to do is go to optionalpha.com/7steps. That's just the number 7, STEPS. So 7 steps. And you can download that guide for free. And again, it's going to help you start to develop those good habits when you look for new trades. So again, if you're a new member or if you haven't downloaded it before, optionalpha.com/7steps. All right, so as we continue this conversation about being a consistent and profitable trader, I think the next thing that we have to talk about is that you have to go small, right? And so most people are, you got to go big, right? So most people in this business say you got to go big. When you have opportunities, you got to put a lot of money into it and you got to, invest 30% of your account. I say the complete opposite. I think you have to focus on being small. Don't focus on those big trades and huge positions. You always want to have those little positions that will inevitably be way more profitable in the long run. And we've proven this time and time again. We had a case study that we looked at where the trader who was trading just a small amount of his money in a small account was actually more profitable when he had smaller trades versus having larger trades. So it definitely works. The math works behind it. You have to focus on small trades. And what that means is that you don't have to worry about having these huge, large positions that keep you up overnight. You need to just focus on a couple small positions each day or each week, and long term, you're going to be more consistent and successful. Now, the other thing is you can't get trapped into the bad trades. I see this all the time, right? And it's on my side of the equation, I guess, because I see all the emails from people coming in and members and newsletter subscribers and people who just read the blog. Everyone's always trapped in the bad trades. But really, you have to realize that if each trade is equally important to you, meaning that if you enter trade A, and that's an important trade, and you enter trade B, and that's an important trade, if one of those goes bad, it's not that you did necessarily something wrong, right? If you're entering the trades the way that we teach them at a high probability of success and pricing them right, then you're going to have trades that go wrong and they go bad and they lose money. But you have to get over those trades and work around those trades. And again, being a more consistent trader means that you're not going to focus and dwell on some of those losses. You have to celebrate the wins, of course, but don't dwell on some of these losing trades. If you know your numbers and you're doing things right, then you just have to chalk it up to a bad trade and the coin didn't go your way, right? The coin flip didn't work out in your favor. You need to, put more trades on and increase the number of trades that you're doing overall. So now this leads me to my second to last point. And in being a consistent and profitable trader, I honestly believe that this one single thing should completely change your outlook on trading. And we've talked about it many times, but I really want to dive into it here because in my eyes, my best friend trading, my 100% best friend trading and my best partner trading is the law of large numbers. So if you don't know the law of large numbers, it basically says that the more times that you do something or the more occurrences you have in a study, the closer and closer you're going to get to your expected outcome. So in the case of a coin flip, if we were flipping a coin and we had heads and tails, if we flipped it 10 times versus 10 million times, we're more likely to get 50-50 on the 10 million coin flips versus the initial 10 coin flips that we do. We might have 6 and 4 or 3 and 7 because it's only 10 flips. But after 10 million coin flips, we're going to have a much closer expected outcome of 50-50. Now, here's some key stats that I think are going to be really, really important. So you want to pay attention to this, but again, we'll have them in the show notes. You just go to optionalpha.com/show34, just the number 34, optionalpha.com/show34. So when we talk about trading and probabilities, here are a couple key stats that I want you to know. After you have made 10 trades, your probability of success varies by up to 20%. So what does this mean? This means that if we make 10 trades and each trade has an initial probability of success of 80%. So we're placing the exact same type of trade, same risk reward, 80% chance of winning on the initial onset. After making just 10 of those trades, our success could vary by 20%, meaning that we could have 100% winners after 10 trades, in which case you probably think you're a genius and you've mastered this whole trading thing. And I've definitely seen that before. And then you could also have maybe 60% winners. So you're about half and half. So you start thinking to yourself, hey, this high probability trading thing doesn't really work. I've made 10 trades. They're all high probability. I should be winning, right? But I only have 60% winners and, I lost on the other half. Now, after 100 trades, so you keep going with it. You keep doing what we're telling you about becoming more consistent, sticking with it, not getting trapped in the bad trades. You do lots of small trades. You make 100 trades. The variance in your probability of success now drops to 10%. So now you're still targeting those same 80% probability of success trades. Now you could have 90% winners or 70% winners, or somewhere in between there, right around 80%, but within a 10% margin either way. So now you can see the more trades that you've done, you stick with it, you stay consistent, you don't get trapped in bad trades. Now you're starting to see that you're becoming even more and more successful. But look, 100 trades is hard to do. Let's not get over that fact, right? It could take you a couple months to get 100 trades on. In some cases, it could take you a couple weeks to get 100 trades on if the market is really active and volatile. But the key here is that as you trade more often and you stick with it, your level of success becomes more and more predictable and consistent. It's just how the numbers work. There is no working around it. These numbers are what they are. You can't hide from the math. Okay, so now 2 other examples. So after 1,000 trades now, if you make 1,000 new opening trades in a year, and they're all at the same 80% probability of success level, your overall variance at the end of the year is going to be less than 2%, which means you're going to have pretty much about 80% winners after 1,000 trades. So again, 1,000 trades is a lot to do. That doesn't mean that you have to do it the first year. It means that it could take you 2 years or 3 years. But again, this is where I become even more confident in my own trading, because I know as I keep making more trades past 1,000 and 4,000, 10,000, whatever it is, the more and more I trade, the tighter my consistency is going to become. And I'm going to become even more and more consistent long term. So that's why I always tell people you have to stick with it for more than the 21 days. You got to stick with it till it becomes a habit, and then you just keep going from there. Okay. Now, the last stat I think is so incredibly important. After 100,000 trades, which could be over the course of your career, over the course of many, many years of trading, believe me, it's not going to be 1 year or 2 years, but over 100,000 trades, it's less than 0.0001% variance in your returns. That means that if you truly stick with this business and you stay with it, you keep your position size small, you keep making the same high probability trade over and over and over and over again, there is almost no probability in which you lose money or don't grow your account at a significant rate over your career. Now, again, if somebody had told me this earlier in my career, I would have been much more consistent and profitable than I am right now. But that right there, that one stat is why I believe that people have to be engaged in this business long term. It is not a business that you can be in for 10 days or even 10 weeks. The longer you stick with it, the more and more successful you're going to become. And it's almost a mathematical certainty that you will be very successful doing it with 100,000 trades over your career. So I think that that's a really important stat for you to remember. And again, hopefully you can share this with other people. We'll have some tweets that you can share out to other people through the show notes page, again, optionalpha.com/show34. But this is really what people need to understand about options trading. All right, so as we kind of wrap it up before the closing bell segment, I think the last thing that really leads to consistency is your ability to time block your trading activities. We've already talked about how you have to have discipline and how you have to form habits to do it, but even more so than that is you have to time block your trading activities. If you can't build time to trade and invest your hard-earned money, you'll never find a consistent habit of making, adjusting, or closing trades properly. It just won't ever happen. If you whimsically do it, you kind of do it here, you kind of do it there, and if you get a chance, you kind of do it here, you're never going to really form that really strong, solid habit to be able to perfect this strategy and this system to lead to growth in your account and income for your family. It's just never going to happen. So what I suggest you do is start with even 5 minutes a day. Start time blocking, put it on your calendar, say these 5 minutes a day, no matter what happens, no matter where I'm at, I'm going to look at trades, look at the market, analyze my positions, whatever you want to do in those 5 minutes. And religiously come back every single day for those 5 minutes and then start to expand that time. I personally don't think that you really need more than about an hour each day. If the markets are really crazy, maybe an hour and a half to look at trades, analyze all your positions. But again, I'm watching my daughter full time and she's almost 2 years old. There's no way I could sit in front of the computer screen all day and watch the markets, nor do I want to do that. So I think at most you need about an hour a day to do this. If you can do it in less time because you don't need to make as many trades or don't have as much going on, do it in less time, be more efficient and productive with your time. But time blocking your activities is critical to your success and your ability to become more consistent long term. All right, so hopefully you guys enjoyed that kind of spiel on the truth behind how you can be more consistent and profitable. I'd love to know what you thought about that. Please let me know in the show notes page. But let's get right into the closing bell and take a look at a trade that we're going to make in APC.
Now, the closing bell. Find out which stocks we're looking at right now, trades we're making, and hear our game plan moving forward.
All right, so in today's closing bell segment, we're going to look at a trade in APC, which is a petroleum company, and it's basically a play in the energy and oil sector. And it's been really beaten down lately, but it's shown signs of some stability, and more important, implied volatility has popped. So it's up around the 85th percentile right now at the time that we're doing this video. APC is trading around $70, so it's a fairly low price stock. I mean, it's not a $10 or $20 stock, but it's not a $200, $300 stock. So we have the ability, because it's under $100, to do something a little bit more aggressive in APC, because the margin's not going to kill us if we do something undefined risk or naked in a sense. And because implied volatility is really high, we're going to get compensated a lot for selling some options here. So what we're going to do in APC is we're going to actually sell a strangle around the market in APC for a credit of about $2. So we're going to look to take in about $2, which is $200 in value for the actual options. Again, the stock's trading right around 70. Implied volatility is in the 85th percentile. We're going to sell actually the October 80 calls. So they're about 46 days out. We're going to sell those October 80 calls. And then we're going to go down below the market and sell the October 55 puts. Now, what that's going to do is it's going to give us $10 of variance above the market and about $15 of variance below the market. Now, each of these legs is placed at the same probability of success level, meaning about the 15% probability of being in the money level. So we've got about a 70% probability of success overall on this trade. Now, most people ask, well, if this has about the same probability of losing on each side, why are we $15 out on the put side versus only $10 out on the call side? And that's because that implied volatility naturally will adjust on the lower side. It will be skewed towards the put side because stocks are going to fall a lot faster if they do move down. So the pricing in the option chains have already taken into account the fact that if this stock falls, we're going to give it a little bit more room to fall on the downside. So we're going to be able to sell options further out for about the same probability of losing level, or about the same probability of making a winning trade on this. So even though our calls are $10 above and our puts are $15 below, overall, we're pretty neutral on APC. We don't think the stock's really going to go anywhere, but we're just looking to take advantage of the drop in implied volatility. Now, if we do get a nice drop in implied volatility, we should be able to take about $1 out of this trade and get this trade off at about half the profit that we have, or half the gain or half the credit, that we have in the trade. So if we enter the trade for about $2, we'll probably look to exit the trade for about $1 and take that profit early once we see that drop in implied volatility. But again, that $2 range also gives us some, movement beyond our strike prices on this strangle. So should be a really good trade. We have more than a 70% chance of success. Again, we're going to do this position small because the markets are crazy and we've already got tons of other positions, but it's just another number that we can add to our overall trades long term and for our portfolio over the last couple of years. Again, it's just one number. We're trying to get to that large number of making high probability trades. So if this one goes bad, it goes bad. We've got another one right behind it. And if this one goes good, great. It becomes a winning trade that kind of factors into our success long term. So if you want to learn more about some of the trades that we do here at Option Alpha, again, check us out online and you guys sign up for a membership and we can definitely show you all of our trades and nightly reviews of all the trades that we do by going to optionalpha.com/members.
Thanks for listening to the Option Alpha podcast. If you liked what you heard, please drop by iTunes and leave a rating or comment. Plus, you can get everything: free email updates for future shows, transcripts, video tutorials, case studies, and more. Just visit our website at optionalpha.com. optionalpha.com.
All right, so I truly hope you enjoyed today's show, and again, got at least one thing out of it that you can apply right now to make you a smarter, more profitable trader and investor. As always, you can get additional resources, links mentioned in the show, and any related video training from today's show by going to optionalpha.com/show34. That's just the number 34, optionalpha.com/show34. Hey, and could you do me a favor? If you liked today's show, if you thought it was really helpful, if it energized you in any way about trading, please head on over to iTunes and give us a review and rating. It's honestly the best way to get the show into the hands of those who need it the most, and I would be extremely grateful if you could do that right now. And finally, you can get today's freebie, our 7-step checklist for any option trade entry that you are going to go into by going to optionalpha.com/7steps. And until next time, happy trading.